There's nothing inherently evil or wrong with DeFi or cryptocurrency and blockchain itself. However, you can't have trillions of dollars move into a new asset class and not attract criminals and grifters.
All right, let's get real for a second. DeFi sounds amazing. No banks, high returns, global access. But here's the part no one talks about. DeFi is also one of the riskiest places to put your money. And if you're not careful, you could lose everything.
Billion-dollar projects went belly up, and investors lost hundreds of millions of dollars to cybercriminals exploiting weaknesses in various platforms.
Let me break down the 3 biggest dangers you need to watch out for before you even think about investing in DeFi. 1. Scams and rug pulls. The crypto Wild West. First up, scams. They're everywhere.
If you haven't heard of it, consider yourself lucky, because victims lost nearly $3 billion in 2021 alone.
There are projects that launch, promise insane returns, get people to invest, and then, poof, the developers disappear with millions overnight. This is called a rug pull.
Rug pull scam. The rug pull.
Yeah, you remember that one? A crypto project inspired by Squid Game, except investors couldn't sell their tokens. The devs ran away with $3.3 million. Absolute madness. And the worst part? No one can refund you. DeFi is decentralized, meaning if you get scammed, there's no customer service to call. Your money? Gone. And this happens more often than you think. I'll link a video in the descriptions on how you can spot these scams and save yourself before they even happen. Your money depends on it. 2. Smart contract bugs. One tiny flaw can wipe out millions. Now, let's talk about smart contracts. DeFi runs on smart contracts, self-executing code that handles everything. But what happens if that code has a tiny mistake?
What?
You guessed it. If there's even one tiny bug in the code, hackers can exploit it and drain everything.
More than $1 billion worth of crypto has been lost to bridge exploits so far in 2022.
This isn't just theory. It's happened over and over again. Imagine waking up one morning, checking your DeFi investment, and boom, it's all gone. That's the risk you take when dealing with experimental technology. Even the biggest projects have been hacked. Poly Network, Wormhole, Ronin, losses in the billions. How to protect yourself? Stick to well-audited, battle-tested protocols. New projects are riskier. Use insurance. Some DeFi platforms offer coverage for hacks. And never invest more than you can afford to lose. 3. Regulatory uncertainty. Governments versus DeFi. And then we have the biggest wildcard of all. Governments. Right now, DeFi exists in a legal gray area. No rules, no oversight.
But DeFi protocols aren't covered by consumer protection laws, making them riskier than products from regulated institutions.
But that won't last forever. Some countries love DeFi. Others, they want to shut it down. Governments and banks hate losing control. They want to regulate, restrict, or even ban DeFi. If governments decide to ban DeFi or slap heavy regulations on it, we could see major projects disappear overnight. And if you're thinking, that won't happen, just look at China. They straight up banned crypto multiple times. The US and EU, they're already making moves to regulate DeFi. What happens if your favorite DeFi platform gets shut down or forced to comply? Just think about it. How to protect yourself. Diversify. Don't rely on just one DeFi platform or blockchain. Keep some assets in centralized platforms in case regulations shift. Stay informed. Regulations change fast and you need to adapt. That's why I urge you to subscribe to the channel.
So please, whatever.
So yeah, DeFi has huge potential, but it's also full of landmines. One wrong move, and your money could be gone forever. So, should you still invest? Don't worry. Up next, I'll show you exactly how to invest in DeFi safely, avoid scams, and protect your money.